Yeah, what's up, guys? You know what we do? Um, let's analyze the chart. It's a new week. Today is Sunday. This is almost 10 p.m. and in just an hour time now, market is going to open for the week. So let's open the chart now. Let's analyze. Let's break it down. Let's give this week. Understand? So let's go. So we have our chart. Yeah, I have gold, but I won't be coming on gold, yeah. So let me go back to my watch list. Let's go to SEUSDC. Let's use this. They are both same, good, but I used to analyze on this guy. Yeah, this is the 4 hours time frame. We should break it down to the 15 minutes time frame. And you can see how the trade we take on last week. So our trade from last week, you can see this was on Wednesday. We also have other trades I have deleted. I told you I used to delete. I used to clear the chart. Just like I'm going to clear the chart now. So, nice profits also. Oh, my phone is slow. Let me just use my power bank. Guys. So let me remove all drawings and whatever. Let's have a clean chart here and let's start from our weekly time frame. This is what we call top-down analysis. You can see from the weekly time frame we've been bullish since when here? Since 2022 October. We've been bullish, and we broke this resistance. You can see this resistance. First touch, second touch, and this is the third touch. You can see upon coming back, we broke this resistance in 2023. I'll make it our key support level here. You can see this support level here. This is on the weekly time frame. Where's the arrow? Okay, you can see this guy here. This is the key support level that has been skyrocketing, go to where it is now, and this has been since 2023 or 2024 rather. This 2024, last year February 2024 we broke. Remember, we broke it in 2023 November. We came back and retest again February 2024, and we'll be bullish ever since then. And this was the resistance we broke. This guy, this 2000 something, that's the guy who broke there. You can see it here now. Came back, retest, break above. This is the resistance, broke above it, strip liquidity, came back, retest, and skyrocket. So we did not need those data for our charts. We just know we are bullish. And now this is what the major resistance we have here. So now this guy that we broke, you can see on the weekly time frame. So the weekly time frame has now come back for a test of this guy. You understand now? So we don't know. We are still bullish, but that doesn't mean we cannot cash on a few sell trades or whatever. So let's break it down, guys. Now coming, I pay premium. Understand? I pay premium on TradingView. That's why I have two layouts. So guys, but those of you that don't have two layouts, I just like this two layout everything, multiple time frame. You understand? So it helps me narrow things down. But for people, even me that I haven't paid premium self, my premium will still expire. I don't have money to like renew it now. But let me just use it while it lasts. You understand? So now this is the resistance from the weekly. Here's our weekly time frame, and the downward time frame below is our daily time frame. As you can see, market is open now, but your broker is not yet open. Your broker will be open by 11. market is open. As you can see, all where market is open. It closed in 23 hours and 55 minutes for the day. So market is open, guys. Market is open. So what we see now? The major resistance we broke this level here. Where is that arrow down? Alright, this guy. See, that is the guy we broke. And you can see this was the resistance zone. You can see the multiple touches here. This was the resistance zone. Or here resistance zone, but here are the key levels that will keep touching. You understand now? Here are the key levels that will keep repeating. You can see here we have how many touches. Here we have first touch, second touch, third touch, and eventually we broke above it. And so this guy is irrelevant again. We just sweep it upward. But we don't need all this data for whatever we are doing now, because we don't know where market is going back to at this level. So let's just break it down. This is our weekly time frame. How do we see it? This is a strong imbalance candle weekly. It's the arrow. I keep dropping this arrow. This is strong weekly imbalance. You can see we keep building up, like we keep going up. You can see we keep building. Market is trying to come back to this level, but we keep building liquidity, building on this weekly, and this the imbalance we are yet to feel, of which we don't even know if we will come back and feel it. But I just know we are supposed to come back and feel it, but we don't know when. Maybe it's the end of the year, market we have to revert back here. We don't know for now, but we are going up. That doesn't mean we cannot see a few sell trades on the lower time frames or something, but on the weekly time frame we are strongly bullish. You understand now? We can be seeing gold. Gold is currently on 3.7. Probably will be seeing gold within next 4,000 before December, probably before even November self. So what are we seeing here now? This is imbalance. So let's come to our daily time frame and let's make this guy our 4 hours time frame. You understand? Our 4 hours time frame. This guy is going to be our 4 hour time frame now. See, here is our 4 hours time frame, and here is our daily time frame. So let's just quickly look at our breakout and whatever we're looking at here. Here is the swing guy, as you can see. Here is the swing guy. We broke above this guy, you can see. Broke above this guy, make it our support. Came here, we push all the way up here. The markets rally for a bit there. All the way up here. Oh, come on. Okay, we push all the way up here. The market rally for whatever it wants to do there. Then this is another one. The break of structure. Market was supposed to start dumping from here, but eventually we are still very much bullish. It did not dump. So here is another one. Here is another one now. We are yet to break. So these are the break of structures we are seeing. Resistance we are breaking. On the 4 hours time frame, you can see we broke this guy, came back for a test, boom, We broke this guy up, came back for retest, boom. But we could not go far from here. Eventually, it dumps back. Here became a resistance zone because we could not hold this level. So he has to come back to the demand zone that broke. This is the last demand zone that broke the structure. This guy here. So many people, they like to use the full candlestick as their demand zone like this. They will come to this candlestick as their demand zone. Yeah, this is the demand zone. But me, I always like to take it down like snipe entry, understand? So I always like to take it down to the wick of the candle. I don't give a fuck about the body. My demand zone is from the wick. So that is the demand zone right there. That broke this structure. So when this resistance zone here could not hold, it has to come revisit the demand zone before we have to break this resistance here again. We create a new high. As you can see, we came back for a test here, and now we are about to go and break this high also here. Now we are about to go and break this high. Or if this place now cannot hold, we cannot break this high here, maybe just sweep liquidity, or we can never break this high, then we are going to have to revisit this same demand zone that broke this structure. And this is the demand zone here. We're going to revisit this level. We're going to come back and revisit this demand zone. Probably the breakouts we have here, breaker block, whatever, key level, you understand, this is a breaker block, another key level, you understand? So just to make sure we don't have many distinct on our charts, that is blah blah blah. So what can we see here? This is what I want to work with. Now let me break this down. This is the daily time frame. I'm going to bring this down to the 1 hour now. So what can we have here? What do we see? What do we have here now? Now we are working with this eye. We are working with this swing eye. Where is that? To cycle. Alright. We are working with this swing eye. Let me make it trade. That should be black. The swing high and this swing low. This swing low we are working with here. You see? So that is the two guys we are working with. And currently now we have a breakout here. This is a key level. This is a key level. This is a key level. So how do we mark this our key level? You can see here it was a resistance. There's the arrow. So what can we see? Here you can see this was a resistance. How do you know this was a resistance? If you come to this 1 hour now, you can see to a swing high. It's then we sell down from this level, down to this level here. Now we pick support. You understand now? Then we broke it up, make it support, retest, buyer step in again from here. Then but eventually now they could, instead of this from here, we are supposed to see continuation upwards, something like this. I'm supposed to see continuation upwards, something like this. Where's that my part? Alright, from here you see this was it. I'm using this 4 hours time frame too. We broke out, you see, we got this resistance here, this nice, and we see this guy, he came down here. Now we broke above again, you see, to this level. So from here, retest of this breakout. So we're supposed to see continuation upward like this, you understand, like this, to continue the uptrend. But now market is shifting for a bearish movement from here, because we got to this level now, we could not go further again. We now break this guy. That is why we now have to come back for this swing low. We take it out because we have to come and retest this level here now. Then we'll create a new low here, as you can see. So that is why this key level now become resistance. It came back to this key level, deep back. So this guy now is supposed to here now is just like a change of character, you understand now, maybe 1 hour time frame or whatever time frame you are seeing. Even basically on like this 4 hours time frame too, you can just like a minute. So some people just this a key level though, because we break out of this level from a medium time frame or a smaller time frame, I mean. So it was a change of character. So here now is like a pullback to 50% or just retest of the key level. Now we are supposed to see a displacement down here to break this low, but we create another low here which we cannot come back. So that is why when we came back here, we break this guy up, you understand. So we are supposed to see something like this initially. We're supposed to see something like this initially, you see, to come back to this demand zone or wherever key level we have here. Also again, supposed to see something like this, but we did not see it. Instead we see this low. Now the market displays back to this level now. So we have take out the sellers on this key level now, and you can see this 4 hour bearish candle now retesting this key level. So what do we expect now? We're expecting buyers to step in from here and see a pushback up to this resistance and continuation, something like this. This is what we are expecting on the market now. So this is what I'm seeing on gold. You can see this is the key level here. It was a resistance. So if you should come to this 1 hour time frame now, and let's bring this guy down to 15 minutes time frame, where we are executing our daily trades. So if you should come to 15 minutes time frame, you can see what I'm talking about. Resistance, support. We break the resistance from here. We create a new high. So when we came back deep into this place, it became a demand zone. Then you see this guy here, this on the 15-minute charts. Now you can see that here it's also a support that we broke before we came back to this guy here now. So it's going to act like a major resistance for that place. That you can see that the market reacts from there and push it back down. But initially, but the supports here still held, and they are supposed to continue this movement up, but for some reason they were stuck here, and we see a nice displacement down here before we will now pick another support. So now this is a retest of this guy here. We're supposed to break this guy downwards with good displacement, like strong momentum, but we could not. So now market, this is the key level. Let's bring it down to our 1 hour chart. So let me go back to this place now. Let me set my layout on one layout. Let me use 1 hour charts now. So what am I seeing here now? This is what we are having on the chart currently. You can see the key level. The key level is this our guy here. This is our key level here. This is my key level. So this is my key. This is my key level. All right, you see. So let me just quickly explain it again from here. Here, resistance, support, breakout, became demand. This was the support. We are supposed to see continuation from here before. So it became a resistance. Retest the demand zone. Breakout of this guy eventually. We are supposed to come down here, you see. Supposed to come down here, right? From here and continue. But we broke just like this key level on this big time frame now. So we are supposed to now retest it. We're supposed to go up from here, right? But if we eventually break this key level back downwards, yeah, this key level is going to become a new resistance zone, and we display it back down. What am I trying to say here now? This is it now. You see the way I mark my arrow. From here, buyers are supposed to step in now and take it back up. But if we should see something like this, let me pick down my part. If we should see something like this, bam, instead of us to stop here and from here we continue up, if we should see something like a clear breakdown here, maybe to this demand zone, you see, and maybe buyers, before buyers step in, before buyers now step in, now here this key level now is going to become resistance, so where market is going to push to this level and bam, like this. So there's always two scenarios to every trade. Don't force a trade because I'm looking for buy opportunities now. You understand now? It doesn't mean if sellers take over this key level, I should not sell. Now I should be doing it is a must I should buy, it is a must I should buy. Bro, I go short stop loss. So now say they be I go short stop loss. So now this is what I'm seeing on gold. And I don't know about you, I don't know about anybody. I trade what I see. So this is what I see now. And remember, we are breaking it down, but we are still on 1 hour time frame. So we will be going to 15 minutes time frame to like find entries, precise entries. As a scalper, you're not a swing trader, so even 1 hour time frame is too big for me to find entry. You understand? And so I don't, because you see 1 hour, why 1 hour time frame is too big is this. Now look at this guy here. Look at the body of this candle. You see this demand, this demand here now. You can see the body of this candle. You can see the opening of this candle here now. Look at the open. 38.585, and look at the low, 34.440. All right, that is still a good peep there. We still have like how many pips? Just like 40 pips there. It's still good because I'm still on 30 pips stop loss. That is my maximum, and my maximum is still 40 pips. So I used to raise 40 pips at my stop loss. So it's still good, but there are some weak candles that you will just see something like this one now. Let's look at the bearish candle. See the close of this candle. Look at the close of this candle now. 33.845, and look at the low, 37.22. Now look at 37.22.220 to 27.33. That's about 90 pips. And you want to put your stop loss as the wick of the candle, just below the wick. So imagine you are entering a buy here before now. You understand? Maybe immediately you see this 1 hour candle, you see this other 1 hour candle open, and you are taking your entry. You now pick a buy. You go for long here. Imagine you want to go for long here. After this guy closed, you just see that maybe you are a CRT trader. This guy came down, then he closed within the range of the wick of this candle. So you just pick your buy from the opening of this candle. Bam. And your stop loss is below this wick. You can see 33 to 21. You are literally risking, what am I saying? You are risking 120 pips here. And 120 pips It's like I don't know. I don't even know how to put that. But though your profit is going to be like, oh, do you understand? If you're trading on higher time frame, it's good. If you can see this now, look at this guy. Let's say you take your profit. Let's say you even take your profit here. Let's say you even take your profit here, like with this first move here. So if you can look at 33 to 58, that's more than 200 pips there. Because 43 is going to give us like 100 pips. 53 is 200 pips. So to 58 is just like 250 pips there. So yeah, imagine you held till you see this guy here because you believe the market is going to come to this level here. So imagine you held till you see this guy here now, and 33 to 83 or probably 82 now. Let me just say 83. So 33 to that 83 now, that's like 500 pips, and you're in maximum profit. If you are using one standard for 500 pips, you are having $5,000 there. If you are using 0.1, you are having $500 there. Because 100 pips is going to give you $100 on 100 pips on 0.1 is going to give you $100. Then 100 pips on one standard is going to give you $1,000. And if you are using 0.01, the lowest left side, on this 500 pips, you are going to have $50 because 100 pips is going to give you $10. You understand? So you are risking here, if you are using 0.01 now, here you are risking like $12 for $50 profit. 0.1 you are risking like $120 for $500 profit. One standard you are risking like 1,200 for, and you can see it's literally almost hit your stop loss though. And imagine you're holding this trade. Can you even have the mind? Most of yourself will even exit the trade before the thing even hits your stop loss, because look at this guy, it was just coming down. Immediately you enter by this guy, it just go up small, maybe you see just 30 pips profit, then it starts coming back down. You see, it starts coming back down instantly. It starts coming back down till almost your stop loss. It comes to 22 now. Look at the low, 23.760. Almost hit your stop loss here. So if you are still holding, you that you are risking 1-2 here now, you're already seeing like minus 900 or minus 1,000 something. You will be like, Jesus, so this thing they go my stop loss already. So you could just even say, make I exit this trade though. And now when the market will be going back up now, you won't be able to enter again. Person like me, if my market is if my trade is stop loss, if the market is pushing back up again, I won't be able to enter again, because I'll be like, I don't want to lose again on this thing, or I'll lose this one, or maybe I just exit the trade before even hit stop loss, because I don't want to lose everything. I'm like, it will eventually hit stop loss and I exit the trade. You understand now? So you can see now. So that is the reason why you can. It's not. I don't know if you are people that have big accounts. You can see all those are big traders. Them Jeffrey Bessie, Koju Forest and Co. YB, all of them. Mamba. They can be risking this kind of pips to take this kind of winning, because they have. You understand? Had enough capital to withstand all this kind of markets. Well, you see, person like me, my stop loss is always 30 pips, 40 pips, and I'm even trying to make sure I stick with 30 pips, because so that is why if I was on this trade, I'm going to break it down to the 15 minutes. You can see, I know that this place was my demand zone, right? This is where I wanted to buy from, right? Let me mark it out first. So this is where I wanted to buy from, right? This guy here. Can literally see the wick here, or this guy. So I will just break it down to my 15 minutes. This I enter my trade. So when I break it down to the 15 minutes now, look at the 15 minutes. Where did I see the wick of the 15 minutes now? I used to come to the wick. You can see the wick here. This is the 15 minutes demand zone here. You can see. So instead of me bringing my entry, buying from this guy here now, I would wait. I will do what? I will wait for market to come back to this demand here before I buy. Or this is what I'm going to do. Or I will pick this guy here and I'll look at this demand here, this key level. You see it now, this key level. So let me remove this guy first so that you see clearly. So this is the 1 hour demand zone. You are seeing, see how big it is from 34 to 22. That peep is like, that is even where it take profit for me. You understand? So I would wait. This is what I will do. So the market was here. Let me pick my arrow. Let me show you what I'm seeing. So the market, you see that 1 hour candle, right? The market, it dipped to this level. Then buyers push it to this level. You understand now? So when buyers push the market to this level now, this other guy open. If you can see now, this is 10. You can see this is the 1 hour. When 10 o'clock candle open, 10 o'clock candle now open, it was trying to go up. So I will mark this zone and I will mark this zone. I didn't be when this candle open, I did not come back to retest this other block here. It just break this guy the way we see break here. See, this is breakout, retest, boom. You can see the pump. So ADB, it was from here this guy broke out and it was coming back down here. I will not buy from here. Just do I wanted to do from this zone now. I will not buy from here and boom. But because this guy now could not break here, you see, it has to come back down here. So me now, instead of me to enter, you see, the same trade you want to go for long just now that you were buying from this area, me now, the only reason why I'll be buying from this area is IDB now see breakout 15 minutes candle close above this zone and I see retest just like something you are seeing here now. That is when I can buy. But because here did not, so I will come back here. I will wait for market to come back here. Of course, I will not just set my entry. I will make sure I see some wick. You can see this guy now. You can see the wick. It's coming. It's close. Good. I can even buy from the closing of this candle because I see this long wick. I can even buy from the closing of this candle. And you see from 29 to 21, it's still like 80 pips, which is still big for me also. Well, let's say I still bring the time frame down to like 5 minutes, but let me just say I'm buying from this demand zone. I just said buy or die. Pam. So instead of me risking the pip you were risking, you that you were risking 120 pips. See now me, I'm only risking 50 pips here. And you know me that I cannot risk 50 pips. I used to risk 30 pips. So if my entry is 26, my stop loss is going to be 23.2. You can see it here. So this is 30 pips here. I said I did not ever hit stop loss. And look at, this is the first TPO that you were catching 200 pips on. Me now I'm catching 26 to 58. I'm catching more than how many? 36, 46, 50, there's 300 pips already now. And look at your second TP, which is the maximum TP that you catch 500 pips on. Look at it. Now I'll be catching, this is 26, right? This is 26, 36, 46, 56, 66, 76, 86. So it's 83. So I'll be catching like 500 pips plus also almost 600 pips there I'll be catching. But look at what I'm risking. So if I'm using one standard here, I'm only risking on these 30 pips. Now if I'm using one standard here, instead of me risking that 1-2 that you were risking, you that is buying from the closure of that 1 hour candle because your time frame is 1 hour time frame. Me now, I'm only risking, instead of me risking 1-2 as you here now, I'm only risking $300 and I'm making the same profit you are making because we're using the same loss size, right? And if it is 0.1, here I'm only risking $30 to make 500. You understand now? So it's all this kind of entry that I'm looking for. Of course, me, I'm not a swing trader. I know I will know the position to this kind of TP because this will be my target. You understand? Because I'm not a swing trader, this will be my target. This is where I would have exit my trade. This maximum here This way I would have exit my trade looking for sell opportunities. You understand? Okay. And here might be my first TP. This zone might be my like first TP, and this will be my maximum TP. And you can see, so when we broke out, when this guy was coming back down here, and I can enter another buy from here, because if you should look at this zone, this guy here, bring it down here, you can see another touch. I would have entered another buy from here again, and boom, look at it. So if you look at our weekly trade, last week trade, you can see we cash on all these buys too. It's not like I'm just saying I would have. We cash on all these buys too. So we cash on all these buys, and this would have been my initial TP also, or because I'm seeing many touches here, I know that they are going to break this guy. And that's what I even did last week. Now look at my trades now. Go to my TikTok. So that's why I extend my take profit. I said this guy might not hold, and I extend my take profit to this guy, right? That's what I did. I extend my take profits to this guy here. This guy here, 82. That's why I extend my take profits to. And bam, when I check my TikTok, you'll see it. I even had 2 entries. I had 2 entries there. So that is this, but it was not as snipe as this, but I'm just showing you now. So because I don't used to stay on the chart often. You understand? So let's break this down, and these are 15 minutes time frame. So what can we see here now in the 15? We are expecting a retest at this level, right? This key level, this gray area you are seeing now, right? Seeing a retest and a continuation. But where are we expecting the retest from? As you can see, this was the key level we broke. This was where we cashed on our last trade of Friday. This was the key level we broke, as you can see. As you can see, this was a key level we broke high. Make it retest this. Look at it here. This guy will displace high, retest, and boom, before you see this movement here. So when market was coming back here, now you can see here, this level here, you can see buyers are trying to step in here. But the volume of sellers that was coming down was so massive that the buyers from this level could not hold it. So here became a resistance, and now they are coming back for this guy. So now we are going to wait. This is our demand here on the 15 minutes now. This was the level I was talking about. This level here. You can see buyers are trying to buy from here, right? So it broke out from this guy here. Bam, buyers, you can see this week, buyers 1, 2, buyers continue trying to buy it, but the volume of sellers was so hard, they eventually break out of this place. So now where are we expecting this guy to come to now? We're expecting it to come to this place here, this week. This is our 15 minutes week, right? Boom. And this is our new demand. So market is to come back here. So the market is to come back here. Drop to this level and bam, up. Of course, we are going to catch a few bumps on the road from this level and this level, but it doesn't matter. We are going to continue going up. It's a situation whereby we cannot break either this level or this other level here. That is when this demand will be invalid. Then we'll surely come back, take out this demand here, we displace down here as retest, and boom, downwards again. But the high probability trade here is for this market to come back here and go up. But we always adapt to the market. Don't force market. You understand? Don't force the chart. Always adapt to the market. So whichever, that's why we have these two. Let me come back to my 1 hour chart. That is why we have these two guys here. So whichever one plays out, if you should break down, we are going to sell from this level upon retest that ways. And if you should continue going up, we are going to buy. If this level, we are just going to buy from this level. You understand? I continue going up. But if this buy level should not hold now, and it's eventually take our stop loss and breaks down, and upon retest here, we are going to short it. You understand? And our target is going to be anywhere within this range, or maybe this demand zone. But I'm not sure we are going to get to we might eventually get to this demand zone. But why we are so very much bullish now, because if you should apply trend line to this guy, now, you can see we'll be analyzing the market now. Now let's pick our trend line. This is, let's see. If you apply trend line to this guy, this is our trend line, our bearish trend line that we broke out from. You can see. Let me set this guy away. Alright, good. Look at the breakouts here. This was the breakout candle on Friday. This candle. I don't want to add this favorite tools bars to my chart. I hide them. So this was the breakout. This is the retest. Demand. Boom. And this is where we come. So we are coming back here now to this key level. Boom. Upward again. Continue. Because we have broke out this trend line now. You understand? So we have break this trend line. This resistance trend line we have break it. That is why our market is now bullish, because we have break this trend. I'll break the trend line. And for demand trend line at this area now, you can just connect your lows from here. This is your demand trend line. You understand? So this can be your demand trend line. And if you look at where this demand trend line ends up with now, you can see it's in this zone where we are expecting this push up back. Look at this here now, this area. So it's retest of the same trend line to bounce it back up again. So from here now, just market deep into this level now. We should be, market is open now. This is 10:42 p.m. Nigeria time, and almost that should be 5:42 New York time, because 18, that is when market is going to open at 11 p.m. Nigeria time. Understand? So here it is. So this is the Sunday, and this is the 18th. So this is the guy we are expecting to push markets down now to this our zone. Market open now, just let market do whatever it's doing. Dump to this zone. Buyers. Here is going to be a major resistance. You understand? At this area, this level, from this week to this year, there's going to be resistance that can maybe push market back to this level. You understand now? Okay. Or the volume of buyers here might just be too strong, and it will just break out of this guy, come and retest this level here, 73. You understand now? This is another demand here that will broke out of, so you can just come back to this level, and maybe this guy will have to bounce it back down, or it should just break and continue going up. You understand? But a situation whereby this level cannot hold and we broke this trend line, you see. It's now break down here. Now we have broke demand trend line again. That's when we now use it as selling. So let's just wait for markets to open and do its thing. So peace out. This is my analysis on gold, guys.